study circle. Recently, we have also held annual conference, and it was a great success under the guidance of our Central Council member in the presence of our President ICI. And we are regularly organizing physical as well as virtual meetings on recent, current, and relevant topics. So, friend, with this backgrounds of our study circle, I am just privileged to introduce Chitle sir. CA Chandrasekhar Chitle sir is a Central Council member. He is chairman of
study circle.
Sorry.
Whether Ranjit Kumar Agarwal is member of your study circle?
Yes, sir. Yes, sir.
Patron member of our.
तो हम सब समझ लेते क्या है study circle.
Yes, sir. Yes, sir. So, sir, CA Chandrasekhar Chitle sir is a Central Council member. He is chairman of Direct Tax Committee as well as Peer Review Board. Friends, he was council member for the period 2018 to 22 and again 22 to 25. He is member of various committees like ASB, AASB, SRSB, Internal Audit, TAQRB, FRRB, etc. He has authored many articles for Economic Times, Times of India, Indian Express, CA Journal, CMA Journal, etc. He is lecturer at colleges and management institutions, has authored study materials for direct access, which is adopted as study material for Institute of Cost Accountants for intermediate and final exams. A specialist in direct access in drafting and conveyancing, corporate counseling, etc. With this brief introduction, I place our learned speaker to the audience. Thank you, sir.
Thank you. Good evening. It's indeed a pleasure to join this virtual meeting of the study circle on a very important topic. Honorable office bearers of this study circle, learned speaker and my colleague on council, CA Ranjit Kumar Agarwal, another colleague from Bhopal, CA Abhay Chajed, both of whom are working under TAQRB and really doing good work as far as tax audits are concerned. So it is more relevant that you call Chairman TAQRB instead of Chairman DTC to talk on tax audit, because you don't have occasion to stand before him in official capacity. And his lecture will certainly tell you how to address the responsibility enjoined upon the chartered accountants by the enactment to perform these tax audits. As we are aware that Direct Tax Committee is working, taking initiative in the area of direct taxes. And after assuming the charge in consultation with Ranjit Agarwal and Abhay, we have taken a decision that we will not go to the CBDT for seeking any extension. So the first thing to start with this particular webinar, it would be very relevant to note that 30th day of September is going to be the last date for the purpose of uploading. If the uploading takes place on that day, fine. Otherwise, one will have to pay additional fees, and then that uploading process continues. For the purpose of taking this decision, the Direct Tax Committee deliberations wherein Ranjit and Abhay participated, it was thought fit that seeking extension is not the job of ICI, because CBDT asks if there is a delay, then what is cost to you as a chartered accountants? So really, we don't have to bear any cost. It is the assessee who pays the cost. And we tried other industry associations also to represent, but their answer was, no, we want to be in good books of the CBDT. So you represent, that means you be in the bad books, we will remain in good books. So that is not acceptable. Secondly, there are other institutions coming from Kolkata, claiming that, okay, number of chartered accounts are insufficient, and therefore, एक मिनट, here battery low है थोड़ा, उसको charge करने बोलो, battery slow. So they are seeking that because number of chartered accountants are on a lower side, that they are seeking extension. So give us the mandate for the purpose of conducting tax audit. Even Institute of Company Secretaries is also joining bandwagon and seeking this audit work.
Size network is fluctuating. Sir, your voice is not coming.
Your costs increase, but your fees do not increase. And therefore, ultimately, the not only contribution, but you don't have time for the purpose of then attending education programs, updating yourself, furnishing with latest developments, maybe thinking of area for diversification, even leisure. So this is not in long-term interest of the profession that we seek the extension. Let it be concluded by 30th of September. Those who are late mongers, let them pay the charge, so that next time they will come to your office in the month of April, May, June. In fact, when we made this announcement in the month of July, feedback was received that in the month of August, the tax audit clients have started coming with the books of account. So maybe this time it is August, but those who pay fees or penalty for delay, maybe next time they will come in the month of May and June, and you will have better days and better profession to practice. So that is one aspect that I need inform you all. So everybody has to tighten up belts and conclude the work by 30th of September, and enlighten the clients that September or August are not the months to start the tax audit. It is April, May or June. There you should be ready with the books of account. Coming to tax audit, when we started preparing this guidance note, there was one trade-off whether we should focus on which form, because we noticed that the form available in the income tax rules and the form available in the schema, there is slight variation. But that slight variation leads to some significant consequences, because say, for example, clause 27A, clause 38, clause 39, where in form it only talks of central excise and SENVAT credit and service tax. But when it comes to schema also talks of input tax credit and GST. So on which form we should give guidance to the members. And it was deliberated that as far as form given in the rules is concerned, it is having sanction of law, because section 44AB gives mandate to the CBDT to issue forms. Under 119, CBDT gets the empowerment. Whatever rule forms they are announced, they are placed before both the houses of parliament for 30 days and they get confirmed. So whatever form which is available in the rules is the form which is having sanction of law. Schema is the product of CBDT facilitating uploading. So that is not the form having sanction of law. So if nobody, we have remained silent on GST and input tax credit, thereby meaning if you do not report on GST or input tax credit, etc., then it won't be considered as non-performance of duty or want of any diligence on part of a chartered accountant. From some quarters, the issue came up that what happens, because ultimately when we upload the form, there the word GST, input tax credit would be there, and we would be digitally signing this particular form. So will not be considered that we are answering that particular question. And answer to that is, you will not be considered as negligent or non-performer, because see, there is a mechanism for the purpose of uploading the tax audit report on income tax website, and that mechanism has been determined by the CBDT, and CBDT has prepared this schema. So there is no other manner in which whatever tax audit report you have issued as per the rules, you can communicate to the income tax department. So there is a dictum in law that assessee cannot be expected to perform impossible. And this dictum is not only the dictum that we carry as a dictum, but it has sanction of decision of Supreme Court. The Supreme Court in its decision reported in 219 ITR page 410, Life Insurance Corporation of India versus CIT, it states this particular thing, that assessee is not expected to perform impossible. If you read that decision, you will understand the context in which it was given, and it is followed in number of other judgments by High Courts and Supreme Court. So in this background, if the chartered accountant is enjoined upon a duty of communicating his tax audit report to the CBDT, and this is the only mechanism where he cannot score off the portion like GST, input tax credit, then how he will communicate it to the CBDT? Therefore, even if he is answering that particular question in uploaded schema, still he will not be considered as non-compliant in my view. The decisions, etc., we have discussed in guidance note. Then there was one complaint, particularly in Kolkata meeting also, that reporting on clause 16D. Clause 16 is item amounts not credited to profit and loss statement. D, any other item of income, wherein proprietary concern, interest, etc. is reported. And even if you have made addition in your ITR, still it gets doubly added. So what we should do? So there we have to appreciate that this is the error of programming under section 143(1) by the Central Board of Direct Taxes and not error in reporting by the chartered accountant. Maybe the assessee has to face the music, but CA is not the root cause of that folly. It is the CBDT. We have represented the CBDT, but till the time they correct the schema, the programming and the software, I think we will have to report in a manner. So our reporting should continue in a manner in which we are eager to reporting. Then as far as eligibility is concerned, we have to take a serious cause, because a chartered accountant is eligible to perform the audit if he qualifies under section 288. And there you will have to closely look whether you are eligible. Take appointment letter, because maybe you are doing audit of your friend and others, maybe for past 10 years. But if you check your audit file, you will realize that appointment letter is not there. And that itself is a breach of our standards on auditing. Coming to your appointments, even I draw attention to significant disqualification given in section 288, that if you are having business relationship with the assessee, then you are not entitled to do the tax audit. And rule 51A gives some exception, and those exceptions are if you are having business relationship in telecommunication business, hotel, hospitality, and one more business, then in that case, if you are dealing with that particular enterprise at arm's length and airlines, the transportation, then in that case, you are not considered as ineligible. But if you are having business relationship of any other nature, then in that case, you are not eligible to conduct the audit. So take example of supposing you are having some say program in your family, some wedding or some anniversary, and you have given it to the caterer who happens to be your client. That would be a business relationship, and that may disentitle you from carrying out audit. You are constructing your bungalow, you are engaged architect, you are engaged contractor, you are purchasing material, steel, cement from your own client. So that also would be business relationship. And in such case, even if you are dealing at arm's length, under section 188, it may not be possible for you to carry out the tax audit. So those things we have to keep in mind. Also, the limitations flow from our code of ethics, and which have been very carefully drafted by CA Ranjit Kumar Agarwal when he was chairing this ethical standards board. So there also we have to consider that if you are indebted to the client, then you are not eligible. But ESB says that if you are indebted for an amount up to rupees 1 lakh, then you qualify to do the audit. That is fine. But if you read section 288, it says that if you are indebted to the client, you are not eligible to do. So even if you are indebted for 10 rupees, under code of ethics, you may be eligible, but under section 288, you are not eligible. So stricter provisions will follow. So there are various such aspects relating to audit. Again, as far as Abhay Chajed is concerned, he has come out with, as a vice chairman of this, I think, accounting standards board in a team, with format for the purpose of financial statements of non-corporate entities for limited liability partnership. So in that case, you have to educate the clients to follow those formats. Queries are coming from various quarters, whether those formats are mandatory. So those formats are not mandatory. Presently, they are recommendatory. But if we as a profession make it habitual for bankers and others to see that format, I think the balance sheet should be comparable. It would add value. And secondly, Tally and other software may not be automatically coming out with those formats. So value of our profession also will be preserved, and they may be more analytical in nature. So you may also consider those formats. There are various other things which are of importance. Particularly, you will ask that you are talking everything but not about clause 30C and clause 44. But I am sure that Ranjit Bhai will definitely take into account these two important clauses, which are the crux of tax audit this year. As far as Direct Taxation Committee, our guidance note is concerned, guidance note has dealt with it. Before Ranjit Agarwal deals with it, let me also tell you that we have made representation to the CBDT that these should be omitted, and if you have time to take a decision, maybe at least they should be kept on hold for this year. From some quarters, it was felt that there is a circular of CBDT in 2021 that till 31st March 2022. These two clauses are not applicable. So whether this 31st March 2022 relates to financial year or the year of reporting, and some quarters it was felt that it is financial year. At DTC, in consultation with both Abhay Chajed and Ranjit Agarwal, we have taken a view that this 31st March 2022 means the reporting period and not the financial year. And the reason for that this circular is not the first circular, this is the fourth circular. These two clauses were introduced from 20th July 2018, and several representations were made. So in August 2018, a circular was issued stating that various difficulties are reported by the stakeholders, certain representations have been received, and considering the difficulties faced from 20th August 2018 to 31st March 2019, reporting under clause 30C and 44 is kept in abeyance. Subsequent year also, same thing was reported, citing difficulties and representation. In 2020, another circular was issued. Here it was stated that because of advent of pandemic, the clauses are kept on abeyance, and which was continued in 2021, citing pandemic. Thereafter, there has not been any issuance of this circular. So this 31st March 2022 refers to the reporting period and not for the period of financial year. Therefore, we have to report under these two clauses. And because we have to report under these two clauses, the study circle has required to involve services of Ranjit Agarwal to explain what it is. So we have elaborately discussed in DTC, and we have come to certain conclusion, which will certainly be informed to you by Ranjit Bhai. Abhay Chajed also will be guiding you, making his opening remarks, and I'm sure that both of them will satisfy your all questions and all queries. Of course, if they don't, I am available. Thank you.
Thank you, sir. Thanks a lot, sir. Now requesting Pratik to please give a formal vote of thanks to Chitle sir.
Thank you, Sandeep ji. Am I audible?
Yeah.
Ji, it's an honor, sir, that you are there present with us. I thank you on my personal behalf, on behalf of all the members of Central Calcutta CA Study Circle. And so we really look forward to have you again in the future sessions with us. And whatever you have said, sir, this is the pain points for all the chartered accountants in profession, I guess. And this is very good that the institute is taking up very clearly and communicating all the messages to the members. And I'm sure in coming times, the profession will be benefited with this hard stances. And we thank you for your time today, sir. And we really thank you today. Thank you, sir.
And we thank Chitle sir one more reason, because last moment he accepted our request to be here for 5-10 minutes. So that shows his generosity towards the Eastern region and towards the tax audit programs. And he is the person last year he has decided that he will not pursue the CBDT for enhancing the tax audit due dates. And the council accepted his view. That's why we are, I think it will save the time and the money of the professional also if the dates are not extended. Thank you.
Absolutely, sir. Thank you, sir.
Thank you, sir. Thanks a lot.
Thank you, Chitle.
Now moving forward, may I request our committee member Manish Barelia to please introduce CA Abhay Chajed ji, Vice Chairman of TAQRB.
I think Sandeep ji, that
just
is
a small sir.
Okay.
Just
Okay.
For audience, it's very important. For the EIRC, it's important.
Okay.
Please.
Thank you, Sandeep ji. Good evening, everybody. CA Abhay Kumar Chajed is a fellow member of ICAI and has completed Diploma in Information System Audit and Certification course of IRS and Forensic Accounting and Audit. He is practicing as partner with SL Thakur and Company LLP Bhopal since 2000 and is heading the audit and assurance division. He was elected as managing committee member of Bhopal branch of ICAI and has held position of chairman, vice chairman, secretary and treasurer during the year 2010 to 2013. He got elected as a regional council member of Central India Regional Council of ICAI for the period 2013 to 2016 and 2016 to 2019 and has held position as chairman from 2016 to 2017. Vice chairman, treasurer and CICASA chairman during the period 2013 to 16. He was co-opted member in Valuation Standard Board Committee of ICAI for the year 1920. He is elected as Central Council member ICAI for the term 2022 to 2025. He is an executive committee of ICAI and vice chairman in Accounting Standard Board, Financial Review Reporting Board and Taxation Audit Quality Review Board and members in various non-standing committees. He has been a speaker at various forums on different topics like Bank Audit, Companies Act, Internal Audit, Standard on Auditing, Peer Review, Forensic Audit, etc. He has worked as senior audit assistant with Bardon LLP, New York, USA, and gained experience. Over to you, Sandeep ji.
Thank you, Manish ji. Sir, over to you, please. We are waiting for your address.
Thank you very
I have
much.
right to cash, so Abhay and Ranjit, I may leave in between. Thank you.
Okay.
Okay, sir. Thank you.
Thank you.
Thank you for your time.
Thank you, Manish ji, for introducing me to the members of Eastern Region. I think it's truly an honor to be here today. And of course, my brother and I would say a philosopher and guide in the council, Ranjit Bhai, who's my chairman of Taxation Audit Quality Review Board, always guiding. And one good thing about him is that so simple and always available. And it's for me in first time in the council. When you have a council member like Ranjit Bhai, it's so learning. And you learn actually each day. So everybody who's present here today as a participant or who's part of this webinar, we actually as a professional, we learn each day. So I think one of the opportunity I have is to be part of this very prestigious council of 32. And Ranjit Bhai has been guiding me in the Taxation Audit Quality Review Board as chairman. And we are trying to do good job, all the time. And we are trying to actually review the reports. So that is one opportunity which I have got this year as one of the vice chairman of this board. The honorable office bearers of this study circle of EIRC, and I think it's again an opportunity. Prateek ji has been following regularly for me to be here, even for 5-10 minutes. But it's always an opportunity to speak in front of members, share my experience, and Sandeep ji and of course Hariram ji, and I think he switched off his video where I think he was sitting at the best place he could, where you could see the waves of the ocean and the greenery around. So, but I think that is the best place he could find for this wonderful webinar where Ranjit Bhai would be sharing his experience and taking clause by clause. So just to give you an idea, the Taxation Audit Quality Review Board, like I said, I'm the vice chairman and Ranjit Bhai being the chairman of this board. This board started in 2018. And, the Institute of Chartered Accountant actually from time to time has providing guidance either through the guidance note or through the technical guides through the Direct Tax Committee, of course, which is Chitleji being the chairman. So we've been issuing, and recently again, last month, the guidance note on tax audit is issued. So I would sincerely request and urge the members to please have a look to this guidance note, because this guidance note is very important for completing a qualitative tax audit. More importantly, that the last one which was issued in 2014. And now after 8 years, we have the guidance note. So you can imagine the changes which have happened over the years. More particularly, like Chitleji has already mentioned about the clauses 16D, clause 30C, clause 44, and even otherwise other clauses which is to be reported. I think this would be a very important document for all of us to complete the tax audit on time and to do a qualitative job where, we being picking up the tax audit reports for review under this board. So very important for all of you who are attending, and even for members who are not attending, but to actually refer to this guidance note. And further, like this tax audit quality review board, takes care of all the compliances which is to be ensured in terms of the Income Tax Act, where we have the Act 1961, the indirect taxes, where we'll have to check the compliances, whether the tax audit done by the tax auditor, the compliances have been ensured. Wherever there are certain guidance note, technical guides being issued, there we'll ensure that it is as per the guidance note and technical guides, and the reports have been completed, the tax audit has been issued or submitted, which is in line with all these compliances which is to be ensured. So just to give you a brief idea about how the process works, that we first appoint the technical reviewers, where we try these members' experience in tax audit. They are interested to become the technical reviewer. I'm sure those of you who are attending, in case you are interested to be part of this technical reviewer of this board, can always fill in an application through the website of ICI under this Taxation Audit Quality Review Board, and they can be part of this technical reviewer and can review the reports which are selected on sumo moto basis by this board and sent to the reviewers. So once the reviewer reviews the tax audit of a listed company or even an unlisted company, which is a large organization, then that report reviewed is sent to the Taxation Audit Review Group. That again is a TRRG group which is there, which is again is part of this board, which is the second level when the reports are reviewed by the reviewer and then by the group. And once group is reviewing the report, it is sent to the board. Finally, board reviews in terms of the compliances of income tax, the indirect taxes, and the guidance note which are issued. So this is the entire process. Taxation Audit Quality Review has been doing. In each month, we pick up certain reports of listed companies, unlisted companies, check the quality, check the compliances, and wherever there are non-compliances, like the tax auditor have not verified the statements or submitted the tax audit report not in line with any of these compliances which is to be done, then there is an advisory which is sent to the tax auditor to ask them why this issue was not properly attended or why this is a non-compliance under a particular clause. So we are sending advisory to the auditors, and even if there are major non-compliance which affect the true and fair view, when you report under 3CA true and correct or 3CB true and fair, there also we'll have to ensure that if there is a material misstatement or gross negligence in any reporting of the clauses, then even the cases are being referred to disciplinary directorate. So this board is very important in terms of taxation audit quality. So I would request each one of you to please refer to all these guidance note, technical guides which are issued by the ICI for you to complete the audit well on time, as well as to perform a qualitative audit, so that small mistakes, small reportings are not missed, and clauses like 16D or 44 where actually are new, and those reports will be reviewed by us in coming years. These reports should have those reporting done as per the guidance note. So more particularly, I would add to my experience that we issuing the audit report 3C and 3CB, if, in case it's an audit of a company and you issue a 3CA in the tax audit, or a non-corporate entity where you issue 3CB, please ensure that the respective clauses where you give your observations and qualifications, the clause C in case of 3CA and clause 5 in case of 3CB are properly commented upon. Wherever you are taking a representation or wherever you are relying on the certificates which are issued by management, please ensure that a observation or a qualification is covered in Form 3CA and Form 3CB. This is my request, because sometimes we miss reporting in the respective places, but this is our responsibility because we are giving opinion on the 3CD, which is actually prepared by the SSE, and we are verifying all the clauses in the Form 3CD. So please ensure that your responsibility as an auditor, which is already very clearly mentioned in SA 700, that what is your responsibility and what is assessee responsibility. Please ensure to cover both these paragraphs in 3C and 3CB. So this is one point which I would really like you to ensure before uploading the tax audit that the 3CA issued has a para specific where the assessee responsibility as per SS 700 and whereas auditor's responsibility SS 700 is properly mentioned and then uploaded for us to safeguard in future for whatever evidences are required to be produced to any regulator or in any law wherever there is any justification to be asked from the tax auditor. So this was one point, and of course Ranjit Bhai would take you through the clauses and would take up all those practical issues which are relevant and how it has to be reported under each clause. So with this, I would once again thank the entire committee and the office bearer of this very important study circle, and of course initiating this program at the very right time. And like I said, Ranjit Bhai has always been in guidance and an elder brother, so always available for me particularly, and for me as a learning in the council, and being the vice chairman of 3 important board, which is the accounting, the auditing, and the tax audit. So all 3 boards have been given, and even our honorable president belongs to EIRC, so he's given me this responsibility, and I'm trying my best in the council to do justice for whatever responsibility given to me. So thank you once again for this opportunity and inviting me for this program. Thank you.
Thank you, sir. It's our honor to be interact with you. Now requesting Pratik to please carry on.
Thank you, Sandeep. It's really an insightful session, sir. Whatever you said briefly also, and as you said, you are already vice chairing the 3 major, I would say, all related to audit and practicing chartered accountant. So I'm sure as you are so able, so that's why all the major issues and major roles have been handed to you, and you're doing due justice to it. And
thank you.
Sir, this SS 700, what you just mentioned about the role of the auditee and the auditor and their specifically defined thing, I think that's very important, because in practice, as and when we see that during the last days, the audits are just to be signed and uploaded, so we miss on there. And in the coming times, as peer review would also be a very common thing. So this is something which we all need to gear up, and we'll definitely be more vigilant about it. And yes, this is almost a full house in September. Also, when we are having such audience, this speaks for itself that people are really keen to look and what we have to offer, what you guys have to offer for all the members. And so on my personal behalf and on behalf of all the members of our association and study circle, I really thank you for your time and your insights. We really look forward to having many more spiritual sessions. And
thank you so much.
We thank once like Abhay is the first time in the council from Bhopal, and the kind of knowledge and expertise he carry, 3 board giving as a vice chairman itself speaks volume about it, because accounting standard board is a huge responsibility. FRRB another huge work, and TAQRB another taxation. So all 3 board he's carrying along with the respective chairman, and gradually he's getting more and more responsibility because of the expertise and about the contribution in the council. So thank you, Abhay, for joining in this for a small time, but we can invite you for the longer time next time whenever you are free.
Surely, my pleasure. Thank you.
Thank you very much.
Thank you, sir.
Thank you so much.
So we would like to offer a e-memento for your digital library, and Chitale sir left, we forgot that time, so it's just a small token from us. So please accept this from our time.
Very wonderful. Thank you.
Just send you this, sir.
Excellent. Thank you so much.
Back to you, Sandeep.
Thank you, Pratik.
Yeah, with Ranjit Bhai, with your permission, I can.
Yes.
Okay. Thank you.
Sure.
Thank you. Thank you, Manish ji. Thank you. Okay, Sandeep ji.
Thank you, sir.
Okay, thank you. Bye.
Yeah. Even though in our forum, Ranjit ji is not required to be introduced, but Manish, please introduce our speaker of the session. A small introduction. Yep, Manish, please. You're mute. Manish, mute है आपका.
Ranjit ji is a practicing chartered accountant since last 20 years, a company secretary in DISA from ICAI. partner in INRSM and Associates Chartered Accountant since last 20 years. His past achievements include EIRC got the Best Regional Council Award under his chairmanship of EIRC in the year 2013-14. He was elected to the 23rd, 24th and 25th Central Council of the Institute of Chartered Accountants of India 3 times in a row. As the chairman of the Professional Development Committee of ICI, implemented bank branch audit software. Conceptualized and implemented UDIN as chairman of PTC, a landmark reform of ICI. Presently convener of group constituted to implement UDIN concept in all SAR countries. As chairman of the Ethical Standard Board of ICI in 2019, revised the Code of Ethics after a gap of 10 years. Currently chairman of Committee for Members in Industry and Business and Tax Audit Quality Review Board of ICI. A regular speaker on the topics Code of Ethics, Professional Opportunities, Students Motivation Sessions and socially equally active with Lions Club, Bada Bazar Library, JCI, Friends of Tribal Societies, Avantika, etc. Thank you.
Thank you. Thank you, Manish. Ranjit sir, over to you.
Thank you. Thank you very much, Manish, for the nice words. Sandeep, Pratik, and convener, deputy convener of this very renowned study circle, and Hariramji, past regional council member, and all the delegates. Good afternoon to all of you. You already heard some of the thought process of the tax audit quality review board and the direct tax committee, how this board and the committee wants the tax auditor to perform, and what should be the deadline, and no extension of the date will be proposed by this committee as decided by the council. So keeping all these minds, thank you all of you for joining. Before we deliberate on this tax audit quality aspect, let me tell you two very important developments in the last week. One is this ROC of the Ahmedabad. You might have heard that, not mentioning a DIN, they have imposed a 6 lakhs rupees penalty on the company and its director. And in the last week also, there is an order by NFRA, National Financial Reporting Authority, in the case of Vikas WSP company, in which the auditor was Mr. Som Prakash Agarwal from Jaipur. And he has been debarred for 3 years and 3 lakh monetary penalty. And what is the reason? The reason is that he has not considered the recognition of the interest portion on the borrowing. Because of that, the account could become NPA. And the remarks given by the NFRA is that the crucial provisioning of the accounting standard is not known to the chartered accountant in question, and that's why he is not fit for the signing the balance sheet. Or he should take some classes from the Institute of Chartered Account India to know the various provision of the accounting standard. These are the remarks in the order. So why I'm quoting these two examples? Because a small error is now taking the eyes of the regulators. So there are regulators, professional teams are there, and they are pinpointing what the errors auditors are making, and accordingly these penalty in the prosecution and this NFRA orders are coming. Coming to this tax audit aspects, as you have already informed by the Abhay that there is a board, tax audit quality review board, which review the various tax audit done by the member, and there are 3 stages, and based on this review, they advise the member where they have made mistakes or the common errors are there, you correct it. And if there are grave mistake, then the matter goes to the discipline. So as so far we have reviewed 150 tax audit report, in 5 cases has gone to disciplinary, rest has gone advisory. So advisory also are important if the auditors are not following the required compliance or required quality which they are expected as a tax auditor. And there may be a difference of opinion. One more issue came that there may be a difference of opinion about the tax auditor and the management. So what is the role of the auditor? Even if there is a difference of opinion, which has been mentioned in the guidance note also, that you have to report what you think fit. There is a concept called professional skepticism. So you apply your mind, you apply your professional judgment and report whatever you think fit, whether client agree or don't agree. So because you have to save yourself, not the client first. Of course, we help the client to plan the audit, to make them aware what are the provision. But when you are reporting, you cannot say ki I will not report because client will become uncomfortable. So by making client uncomfortable, you cannot become comfortable. You have to become uncomfortable also. So these things you have to keep in mind. We have given a report. This is the study on compliance and reporting in tax audit. This booklet we have given to the members at large. It is hosted on the website of the ICI. Whatever our experience is there while doing the review the various tax audit, this study we have done, and where we found there are various common mistakes members are doing while doing the tax audit. So we'll discuss some of them one by one. These limit and all these things I'm not going, because all members are aware this 1 crore, 5 crore, 10 crore, and this 6% and this digital aspect. The most important aspect, as told by Abhay, this is the first one, is SS 700. Since the reporting requirement as per the guidance note of the ICI, SS 700 says the SSC responsibility and the auditor's responsibility has to be mentioned in the report. But now your report is done online and you are uploading all the figure online. So there you are not finding any space. So where to report this SS 700 aspect? So we have suggested that in the observation para, which is clause 3 as per report 3CA or clause 5 as per 3CB, in that observation para, this 700 should be mentioned. And because that is the only place you can mention SS 700 while uploading the various figure of the report. You will mention in the hard copy, but while uploading on the portal, this observation para clause 3 or clause 5 of 3CA or 3CB, as the case may be, must be mentioned. So this has been also be mentioned in the guidance note also. And this is the common error. Like most of the chartered accountant don't report this SS 700. And once you will not mention about SS 700, then the notices can also come to the auditor next time. I will also let you know how the department is tracking the quality of the audit done by the chartered accountant, and how many the number of limits, 60 tax audit limit as given by the ICA guideline, council guideline. We will discuss also that. But this is the first point, SS 700, already deliberated by the Abhay. Now, if you see, there is a 40A3. Now, various disallowance has been prescribed under section 40A3. Now, the payment made through account pay check or a bank draft or rule 6DD, where this 10,000, 20,000 has become now 10,000. So, if the transactions are huge, it is not possible to verify the hundreds and 200 pages of the bank statement. So, how to go about it? So, we have given a guidance that in this situation, you take a declaration or an observation or a MR from the SSC that not a single amount has been made other than the account pay check or a bank draft as per Rule 60D. And once you are reporting based on the management representation report or a letter from the SSC, this fact should also be mentioned in the observation para clause 3 or clause 5 of 3CA or 3CB, as the case may be. So whenever you are taking any letter or a MR from the SSC and based on that you are reporting, this aspect should be mentioned in clause para clause 3 and 5 of 3CA or 3CB, as the case may be, because that is the where we can save ourselves. That on the basis of the client declaration, we are saying that not a single amount has been paid other than account pay check or a bank draft. Because in thousands and lakhs of cases, not possible to check each and every, and that's why this provision is there. Same point in 269 SS and 269T. When the numbers are huge, and you are not able to verify each and every transaction of loan given and loan repaid. So in that also you can take tax auditor should obtain suitable certificate from the SSC, and on the basis of that certificate we can make a comment on our report. But this aspect should also be mentioned in the clause 3 or clause 5 of 3CA or 3CB, as the case may be. So this is another guidance we are recommending to the members at large. Now, there is a problem in the tax deduction or tax collection. Many times the reconciliation does not happen. And when the reconciliation is not happening because of the non-deduction or a short deduction of tax, which we are required to report under clause 34, then what is the way out? If there are differences due to these various threshold limit or some reconciliation problem, so how to report about this? So in that case also, we recommend that the observation regarding short deduction or a non-deduction, anything you feel, should be mentioned in clause 3 or clause 5 of 3CA or 3CB, as the case may be. Because this is also very, very important. Many times there is a huge gap in the reconciliation of the TDS, or there are many cases where tax are not deducted, which they are supposed to be deducted. So this aspect we have also found that the member should respond in this clause 3 or clause 5, as the case may be. Now, qualification para. Now, here we will also discuss this hard copy has to be uploaded or not. Now, right now, you are not uploading the hard copy, and you are mentioning in the portal that as per notes number so and so of 3CD or this para is the qualification is there or not. But as far as notes to form number 3CD is concerned, they are not a qualified para. They may contain non-qualification or a general additional information also. So this guidance note are mentioned in this guidance note, we have mentioned that only qualification or observation which you want to highlight should only be mentioned in 3CA or 3CB. But other part which are not a qualification should form part of the notes. But by referring the notes number so and so, you are making this qualification, where there are other parts in the notes also which are not qualification item, that should be taken care of while reporting. So the notes and the qualification, there are two separate items. So qualification para should contain only qualification in 3CA or 3CB, and the notes should form part of the 3CD. So this irregularity many members are doing, which we have observed in the tax audit report. So these are the 3C and 3CB issue. Now come to the clauses, various clauses. Now name of the SSC, clause 1. So what is the new about the name of the SSC? Now, if you are doing an audit of a branch and not the head office, so whether the name of the branch should be mentioned along with the name of the SSC? Yes. Most of the cases we have found the SSC, the auditor is doing the audit of a branch of an SSC, but they are only writing the name of the SSC. So if you are doing the branch audit of SSC, the name of the branch must, because there might be 5 branches of that particular SSC, and there are 5 audited for the 5 branches. So you must mention which branch you have done the audit. That's why the name of the SSC and the name of the branch should be mentioned. Now, there are cases where name has been changed. So while reporting the tax audit report, you found there is a different name of the SSC, and while doing the audit, there was a different name of the SSC. So this problem we have also found which name you should mention. So the guidance note given in our guidance note says the name which has been changed after the close of the financial year. But if it has been close of the financial year, it has been changed before signing the audit report, but the name which was at the time of the closure of the financial year, whatever name is there, that name you should mention. If the name has been changed after the closure of the financial year, before filing the report, should not be considered. So whenever you are doing the audit, the name which was at the close of the financial year should be given while reporting. Same problem comes to the address also, because we have found there are different address in the MCA and the different name in the income tax. So there will be a PAN, whatever PAN number your address is there, whatever address the SSC has communicated to the income tax department, that should only be mentioned here, not the address which we have found in the MCA portal. So here the income tax is concerned with the address which he has been communicated, or the address which is in the PAN, because many times we have found PAN has a different address, MCA has a different address. So which address you should verify and which address you should mention. So whatever address is communicated to the income tax department, that should be mentioned while making a report or uploading the report.
But Ranjit ji, sorry for interrupting in between. There are many instances where the address have been like कि पहले main office था, वहाँ छोटा सा बस branch office या नाम का office है, main office है shifted. But ROC में update करने का scope है, GST में update कर देते हैं. Income tax में तो PAN में update होता नहीं unless you reapply for PAN. So,
but if you, how to verify? Like when you are reporting it to the income tax authority in the income tax portal, and they go by the PAN number. So if the PAN number is X address, you cannot say ki I have a, you can give a disclaimer, you can give your comments also, but the main address should be the address given in the PAN. And if the SSC is not able to change the address in the PAN, then how you can help it out? Because the address, whatever in PAN number, has to be communicated to the income tax department, because income tax department does not know what is in the MCA or what is in the GST. So if they are not able to change, you can give that kind of remarks in the your observation. Okay, this is the PAN number address, but the name has been address has been changed, but they are not able to communicate. But in that case, both the address you should communicate to the department.
thank you, sir.
Now here, this clause 4 talks about the registration number of the various indirect tax law. So many times we have found that in the Caro report, you are mentioning various type of indirect tax law you have complied. But the registration number of those various indirect tax laws are not mentioned in the reports. So here our advice is the whatever you must also cross verify what you have reported in the Caro, whatever indirect tax law is applicable to that SSC which has been reported in the Caro, those registration number based on the PAN number of the SSC which has been matched with the PAN should be reported here, and that is our duty, because why we will discuss why this tax audit is required. If we as a auditor are not able to bring the facts to the knowledge of the income tax department, then what is the need of this tax audit? The department is also asking to us many times. That we will discuss in the end, how this department is thinking to tax audit and what is the expectation from the auditor. This clause 8 is one of the most crucial point which we have observed, and the 99% members are not mentioning the relevant section or a clause or the proviso which they are supposed to. Like if the books of accounts are, suppose books of accounts required to be get auditors in any other law, suppose it's a company case. So in this case, we have observed that the most of the auditor 44A and in the bracket 1, they choose from 44 1A, 1B, 1C like this. But there is a clear provision of third proviso to section 44AB which says if your books of accounts are required to be audited under any other law in addition to the Income Tax Act, then you have to report under the third proviso to section 44AB. And here most of the auditors, they have, which we have like a 44 AB A, they 44 AB A or B or whatever option they are choosing, because they are aware if it is a company case, it's a 44 AB A. If it is a non-company case, this is B. This is not the case. In the case where the books of accounts are required to be audited under any other law, then you have to choose the third proviso to section 44 AB, because audit is done in that case under third proviso. In other case, there is a ABCDB, whatever the mention there. So this this selection of the clause is also very, very important while choosing the clause and uploading the report. Similarly, in 8A, there might be a different rates of taxes as per the various sections, like 115 BA, BAA, BAB, BAC, BAD, or 10 IB, 10 IC, 10 ID, in which you have paid taxes under different rates based on the option you have selected. And you are not able to verify. So what you should report in clause 18. So we have observed that in those cases where you are not able to verify if the SSC has paid tax under the various different rates under various sections, then you can take a written submission from the SSC. And this aspect that you have taken a written representation from the SSC for various payment of the various different rates of taxes, and this aspect should be mentioned in the observation of para 3 and 5 of 3C or 3CB, as the case may be. This is very, very important in the sense because you may not be aware what rates of taxes he has paid, or you are not aware whether he has paid or not. So taking certificate from the SSC and mentioning in 3 or 5 of 3C or 3B, very, very to safeguard ourselves that this aspect we have reported properly. Then principal line of business, I am not going into that. Books of account. Here also 44 AA said there is no books of accounts are prescribed for a company. But many people say yes, and they are giving the books of account the list also. Companies Act also does not specifically prescribe any books of account for a company. So neither the 44 AA prescribe books of account nor Companies Act prescribe any books of account to be maintained by the SSC. So in this case, you have to write no. And location of the maintenance of books of account is also one of the critical aspects, because the books of account may not be physically in the office where you are doing. It may be in the server or in the cloud also. So in this guidance note, we have prescribed that the facts where books of accounts are maintained. If it is maintained in the computer system, then the location of the server or the IP address should be reported in the ERP-based computer system. So when you are saying that the books of account are maintained in the cloud or a computer, then the location of the server or the IP address should be reported while reporting under this 11B. If there are a hybrid mode, like some books of accounts are physical and some books of account are in the server, then these two aspects segregating the books of account on the server and the hard copy, both should also be mentioned while reporting in clause 11B. Clause 11C, list of books of account examined. So most of the time we don't mention whatever you have examined, like whatever document you have seen while doing the audit, invoices, receipt, voucher, bills, records, certificates, all these things you should mention. These are the books of account we have examined. And guidance note, if you go through guidance note, also has given this kind of reference. The supporting evidence or relevant document which we have seen should also be made part of the books of account examined. So once you disclose all these things, then it will help assessee also, while if the file is picked up for the scrutiny, so various kind of books of account you have seen, the assessing officer can go through. Already these things have been seen by the auditor and not required to be seen by them. So these are very, very important in the sense you may say, oh, kuch bhi likh dete hain, 2-3 item. No. Whatever you have seen, you give a detailed list of the paper, books, document, certificate, whatever you have seen must be mentioned there. There is a section where 44 AD, it is not in the form 3CD. This section is not updated. So when you are reporting in 44 ADA, then you can choose reported under any other relevant section. There is any other residual section is there. In that section, you can choose 44 ADA if you are going to report in 44 ADA.
Sir, sorry to interrupt again. 44
yeah.
ADA तो सर अपना professional piece वाला हो गया जिसमें 50%
yes.
right? So sir 3CD में उसका क्या sir reference आएगा या mention आएगा?
No, it is this section is not coming while choosing that section. So which section you will pick up? So in a residual clause you can pick up you have reported 44 AD because that section you will not find in 3CD.
But I'm saying, sir, 44 ADA doesn't require 3CD audit, right?
No, 44 AD 3CD audit is not required. But what I'm saying, when you choose the relevant section while reporting on 44 AD, so that point of time, the relevant section, if you are not finding, then residual clause you can choose.
Got it. Thank you, sir.
Now this ICDS. Now ICDS also are very important in the sense that many members have some confusion regarding ICDS. Now there are 10 ICDS and you have to report. If there is no adjustment, no reporting requirement, you must mention 0 or nil. But most of the members are keeping this item blank. So blank is not advisable. Either you put 0 or a nil or whatever. But most of the members are not aware that ICDS are applicable for only 2 reasons: income from business and profession and income from other sources. And wherever mercantile system accounting is followed, only there ICDS is applicable, not in the cash system of accounting. And ICDS is not mandatory for books of account. It is only mandatory for computation of income. So how you are maintaining books of account as per ICDS, that is not a concern. The only concern is that when you are reporting and computation of income, what is the deviation from the ICDS, and that deviation in the form of income or whatever, you have to mention there. So this aspect should be kept in mind by the members at large. And even if you are following mercantile system of accounting, even then it is not mandatory for books of account. So ICDS is only a reporting requirement where you have to report if some deviations are there, and you must report either 0 or nil or whatever, but you must not keep these items blank. Again, this method of valuation 14A, each item of stocks, many members are not mentioning this. Each item of value, each item of stock should be mentioned if there are different valuation requirement is there, and inclusive method or deviation from the exclusive method, all these things which you are all are aware. So the cost or net realizable value, whatever valuation is coming, that you have to mention. So this valuation of inventory is very, very important in the sense that this principal item of stock and the valuation of the each item of stock, most of the members are writing like not possible and we are not unable to verify, because we have seen in many corporate house, big company, 10,000, 20,000 crore company, and the some auditors are not able to report properly the valuation of the stock. And because of the not reporting valuation of the stock properly, there is a huge gap in the profit and loss of that entity. And that's why this match came, because the financial statements are audited by a good firm, but the tax audit done by a small firm, and they are not able to report properly all these aspects. And that's why tax is affected in those type of SSC. And that's why the role of the auditor is very, very important as far as this valuation of inventory is concerned. There is a clause 7 which talks about if the land or building is transferred for a consideration less than the rate fixed by the circle rate or the state government rate. So here 43CA or 50C, these two sections are impacted. Here this clause says if the transfer is less than the circle rate, but if it is equal to or more than the circle rate, then the reporting is not required here. Many reports we have seen that it is more than the circle rate, the auditors are reporting. But the requirement here is saying if the transfer of the land and building is done and the consideration is less than the circle rate under section 43CA or 550C, only then you have to report. So that aspect also you should keep in mind. Only in lesser case your reporting is required, equal to or more than reporting is not required here. Depreciation. Now depreciation also we have seen that we don't match with the annual reports. Now in annual financial statements and the tax audit depreciation, there are a lot of anomalies because the figures are not matching. And one more important aspect here, that date of purchase and date of put to use are most of the item are same. I don't think the date of purchase and date of put to use may be same in all the items. So there are 100 items. You have put date of purchase is X and date of put to use are also X. There might be a difference in the date of purchase and date of put to use, and because of that, the depreciation calculation will vary. But 99% reports, both the dates are same. So whether if you are reporting in that line, whether we have taken any certificate from the SSC, on this date, this asset was put to use. And if it is not the case, then put the actual date to put to use of that asset. Because date of purchase, you have the bills, but how to calculate the date of put to use? So either you take a certificate from the SSC, or if you are getting a different date, they put the different dates, and accordingly the depreciation calculation will change. On the same line, deduction also, date of sale. In most of the, although it is a common error, most of the SSC in the reporting is on the date of sale is same, 100 item, 200 item, same date of sale. Maybe block of asset, another item they are doing, but these are the very small issue. But since it is a common error which we have found while reviewing the various tax audit report, so you must consider how to report effectively in this depreciation also. First, you must verify with the annual accounts, annual reports. Then you must verify with the bills and whatever date of purchase of the assets. Date of put to use are also very important. How to put it, that same date or different dates, or a certificate from the SSC. All these things you should keep in mind while reporting on this addition and deletion. Now, there is a case in 32AC, 33AB, 33ABA, 35, etc., where you are supposed to, SSC is supposed to take a separate audit report because of the various requirement of those sections. Now, when you are, SSC has taken a separate audit report for claiming various kind of deduction. So he must mention the reference of that report. But we have found that the reference of that separate audit report for claiming the deduction is not made. So when you are making your report in 3CA, this aspect you must mention that the deduction under this clause has been claimed as per the separate audit report taken by the SSC on such and such amount, such and such date. So this requirement we have found most of the chartered accountant or auditors are not mentioning in 3CA. So this is as per the guidance note also, if you go through this clause 19, you will find that this requirement is there and it should be mentioned in the form 3CA. ESI fund due date, it's okay. Expenditure at clubs, entrance fee and subscription, all these are clubbed together, it should be separately shown. Late filing of TDS return. If you see the MCQ of the income tax website, they have mentioned that the late filing of TDS return is not a penalty. It is a late filing fees. So the auditor should not mention this late filing as a penalty because penalties are added. So the proper reporting under this clause is required by the auditor. Whether late filing of TDS return is there, it is not a penalty, it is late filing. Because if you go through the circular of the CBDT of 1998, wherein they have made this effective from 62, any bribes, hafta or extortion are not allowable expenditure. So if you make this penalty, then it will also not allowable. So it is not a penalty, it is a late filing fees. So this you should be careful while reporting this late filing of TDS return.
So one thing here I'll interrupt again.
Yes.
So इसके पहले वाले slide में there was this PF ESI which you just skipped, sir. हम लोग तो यहाँ report करते हैं, so we report there, but assessment के time में sir it is always that they add back even when it is paid before the due date. So sir, anything that can be done from the CA side or in reporting side, so this is always happening कि client से due date के बाद जाता है but before filing of return चला जाता है. But in every assessment sir it is added back and tax is levied and then आप रिवाइज करते जाइए उसको, लेकिन वो होता नहीं है.
No, but even if you are reporting ki paid within the due date also.
No, paid after due date, but before filing the ITR. So sir, in that case, it is allowed to be allowed for that year. But sir, वो नहीं रहा. Sir, in my personal experience, in every cases where it is filed after due date but before filing ITR, it is always disallowed in assessment under 143(1), and then you have to file 154, and दो तीन बार करना पड़ता है, फिर भी allow नहीं करते हैं.
No, but you can make a report from the study circle to the directors committee, because whenever we will talk to them, we will raise this issue, because it might be a specific issue, not in general issue. So we can raise this issue. I don't think it may be generally they are disallowing in every case.
So in my experience, at least 7 to 8 clients. But okay, I understood. We'll send it something. Thank you.
So this late filing we have completed. Now 40AI or 40IA. Most of the time we have seen that the consolidated reporting is done by the SSC, where a tax has not been deducted in certain cases which they should be deducted. So if you are not able to randomly giving, they are giving a way for provision for various sundry expenditure, various party, random dates they are giving, even TDS is not deducted also. All these anomalies we can see. There was a case of Indigo where 18,000 crore turnover was there and 100 crore rupees made to sundry party on one particular date. They made the provision and no TDS, nothing is there. So that kind of reporting is not advisable, because that case went to the DC, because reporting under this clause is required separately for each of the individual payee. And if you are saying I am not aware of the individual payee whom the SSC has paid, that is not acceptable. So the reporting separately for each of the individual payee, if it is the TDS is not deducted, that has to be mentioned. and accordingly this 3CA reporting should be made if that is the case. So this clause 21B, most of the SSE are taking cue that voluminous transaction, parties are huge, and the sundry party and the one date, random date, they are making a provision just to claim the deduction. So this aspect should be very, very carefully seen by the auditor while reporting. 48.3 also is the same. If you are not able to verify from the books of account other thing, then you should take the certificate from the SSE about the various disallowance as I have already discussed, and accordingly observation in clause 3 or clause 5 of 3C or 3C should be reported there. Contingent liability is okay. Now MSME, many times we have seen that there is a mention that the annual report MSME interest has been paid, but in the tax audit report it was not reported. So that's why this may be one of the item chartered accountant don't, if the auditor are same or audits are different, because annual report, if MSME is there, then the same has been the amount has to be paid, and the tax audit report must mention that. So this item of interest to MSME should be kept in mind. 48 to be a name and PAN of the persons. Many times it was again not reported because consolidated figure were reported instead of a respective transaction, and the respective persons detail all these things. In this clause also, people take very liberal, and they very lightly they report that consolidated figure and all the name of the party is there, but the PAN is not there. Sometimes names is not there. So this clause also required the guidance note. We have very specifically written in the requirement of this clause is name and the PAN of the person under 48 to be should be reported for individually all person. Consolidated figure and detailed figure is consolidated figure is not required. Detailed figure with the detail of the every person whom payment is made should be mentioned here. 41. Even if the amount is not credited to the profit and loss account, if the amount is there under section 41, the guidance note says it has to be reported whether it has been credited to the profit and loss account or not. So that is not our case that amount should be credited to P&L account. If any amount is there which is chargeable under section 41, then the auditor must report this item here. Many times if you see annual report, these kind of items are there, but the tax audit report, these items are not reported. So the query can be asked from the auditor by referring the annual reports. Here this item is there, but you have not made any report or a comment here. So why you should not be like a question or a like all these things. So be careful while reporting this item also. Excise duty, gratuity, all these things are okay. Now 29A and 29B. I'm not discussing this clause. We will discuss at the end because these are newly inserted clause, and the guidance note detail how to report on this 29A and 29B is there. We will discuss at the end. Guard reporting also, this reporting requirement has been mentioned in our guidance note. We will discuss. 269 SSOT, already I told you that if you are not able to verify each and every item, then take the SS certificate from the SSE, and based on that you should mention in clause section clause 3 or 5 of 3C or 3CB as the case may be, as per the requirement. Section under which assessment order is passed, date of the order, DIN number, these are the requirement you must mention. Trading and the manufacturing concern, yield reporting or all these things, many times we are not finding shortages or excess or a yield or all these things. So whether trading or a manufacturing or a service sector, accordingly, this should also be reported in a detailed way. Turnover, gross profit, we are not discussing here. Now GST 44. Now, as you have already listened to Chitle sir, this reporting is mandatory this year. Although representation was made to defer this, but the department has not come out so far any circular for deferring this clause 44. And this provision was debated at length in the council. And many members were advised that a format of the disclaimer should be given by the institute. So it was debated and it was decided because of the various complexity of this provision, various different nature of the industry. It was decided that the institute will not give any kind of format or of disclaimer while reporting under clause 44. It should be left to the wisdom or a professional skepticism of the auditor while reporting under system. Because the intention of the legislation by putting clause 44 is very, very simple. They have already done the integration of the software of the income tax, GST, and the ROC. 3 departments software are already integrated. And the artificial intelligence is at the work. The purpose of asking this figure under this clause, if you have audited or somebody else has audited, so if they are asking the various data of clause 44 or various expenditure and other whatever 4 or 5 items are there, so why you are not able to provide that? And if the SSC is not able to provide that, the fact should be mentioned there. And if you have already audited this figure, then there is no harm in putting this figure here by yourself. So whether you go by the monthly return of the GST or annual return, depending on the timing of your audit, this clause 44 has to be reported. And if there is any anomalies, the artificial intelligence will plug the loopholes and send a notice to the SSC. So the whole idea of this clause 44 is that there should not be any deviation in the audit by the financial statement and audit by the tax auditor or audit by the GST by themselves. So if there is any deviation or anomaly, the artificial intelligence put by the department in the software will make a report and accordingly notices will be served. So in my opinion, there is a logic behind putting this data of clause 44 by the department, and they are very, very particular to match the data by the software itself, and any anomalies should be reported to the knowledge of the department. So right now, there is no format. If you are not able to get the detailed data from the SSC, then you can make a remarks or make a comment accordingly as per your professional judgment, because you know whether you have audited those data or not. If the data has not been audited by you, somebody else is audited, and the SSC is not providing you, then accordingly you can write. But if you are not able to make any comment here as per your professional judgment, then it's a huge responsibility of auditor. So that's why this clause 44 has been made mandatory this year. And I don't think the government is in any mood to defer this clause for 1 more year. As Chitle ji already told, in this guidance note, we have 2 very, very important formats. That is the one format of the financial statement for non-corporate entity, which has been issued by the ASB recently. And there is a technical guide on financial statement of LLP, which are also been issued by ASB. So both the formats are there. As far as format of the non-corporate SSC is concerned, it is a recommendatory. The institute wants that there should be uniformity in the format in reporting of non-corporate entity, and that's why this format has been prescribed by the ASB. Although it is a recommendatory, there is no mandatory provision to follow this format, but if you follow, it is better. One more clarification has been given in this guidance note, and it was a long pending, and the various capital market intermediary has appreciated this clarification of the institute, where it was said that the premium received on the sale of option should also be included in the turnover criteria, provided if it is not included in the while determining the net profit of the transaction. So if it is not included in the for calculation of the net profit, then the premium, whatever is received on the option, should be part of the turnover. And by making this clarification, lot of the issue of the various capital market intermediary has been resolved. One more decision recently by the principal CIT Mumbai versus Parijad, Jorabi and Irani of March 22, we said that interest remuneration received by the partner from the firm will not be form part of the gross receipt in business for calculation of section 44AB. The reason given in that decision is that partner is not doing business, only firm is doing the business. So the partner has received only interest and remuneration. So these interest and remuneration will not form part of the gross receipt in business for 44AB. So these are the two clarifications has been given in our guidance note, which you must go through. Tax audit report, it has been now mentioned that with the use of the digital signature, you are supposed to upload the form, but the form should also be accompanied by the audited financial statement. So here, if you have done a tax audit, the hard copy you have signed, and that hard copy should also be uploaded on the portal along with the form you are uploading, which has been clarified by this guidance note. Most of the people are not uploading the hard copy of the tax audit report on the portal. And in the form which you have uploaded, various places you have mentioned as per notes on account as a 3CD, this clause, that clause, but that report is not there. So if you are mentioning the various clauses of the 3CD, then the report hard copy you have signed should also form part of the uploaded report. So that's why in this guidance note they have said with your digital signature, tax auditor should also upload the hard copy. Now, as Abhay was telling you that if you are making these small common error, that TAQR giving advisory to the auditor to correct themselves. If there are grossly negligent, then the matters may be referred to the disciplinary committee. And if you are giving an incorrect information, then there is a section 271J. But having said that, now department is also calculating the quality of the reports submitted by the auditor, and they have made an army of the professional to verify and go through the various tax audit reports submitted by the auditor. And as the ROC is doing, by the team of the expert, they are scrutinizing the financial statement and then issuing notices to the management and the auditor. On the same line, the tax audit department, income tax department is also exploring this thing that the professional will go through the various report and then they will issue notices to the SSC and the auditor. If you have crossed the limit of 60 tax audits, which has been prescribed for a one partner or a one proprietor per partner, then that aspect is also calculated through UDI. And the department may ask from the institute on this membership number, how many 44AB or 44AA or 44ADA tax audit report has been, UDI has been generated. So all these details department also can ask from the Income Institute of Chartered Accountants India although you have to mention the UDN number on the portal within 60 days, but still there are lakhs of UDN numbers are to be updated by the various auditors. So they are extending the date to upload it. But if you are not able to update that, they can ask from the institute. And based on the report from the institute, the penalty or other things can be initiated by the department also. Although this 60 tax audit limit is not the concern of the income tax department. It is the limit given by the institute. But the way they are asking the UDN number, so from the UDN, any data, anything they can ask from the Institute of Chartered Accountants India. So this limit of 60 tax audit should also be considered. And just to tell you, 2012, the institute has been supplied the number of tax audit done by the various auditors. That year, the CBDT has given the data. Now, the decision of that year anomaly or this non-compliance of that year by the various tax auditor is now settled now in 2022. And the various tax auditors are getting order from the disciplinary committee of the ICI where they have exceeded the limit of 60 and 1 lakh within the, because if you have exceeded the tax audit limit of 60, you have not complied the council guideline. And if you have not complied the council guideline, there is a 221 clause 1, part 2 and the schedule 2, which talks about that is a material misstatement or grossly negligent. Then either you can be reprimanded or your name will be removed from the register member from 1 day to permanent or maximum 5 lakh rupees penalty. So 2 lakh, 3 lakh, 4 lakh, 1 lakh, depending on the nature, these penalties are also imposed by the ICI, or removal is also happening 1 month, 6 months, 2 months, 3 months, like this. So these are the penal provision done by the institute in the case of the limit has been exceeded by the tax auditor. The orders are coming. Many of the members has received all these orders. So be careful while not to exceed the limit of 60. If the tax auditor more, you can take one more partner so that the limit of 60 can be added in the FRN. Signing partner only will be responsible if there is an anomaly or if there is a negligence or there is a incorrect reporting in the tax audit report. We have also said in the code of ethics that tax auditor can accept the assignment of tax representation, that is fine. And this indebtedness 1 lakh or all, that is already there. This compliance, this study of compliance is already uploaded on the income tax, our institute website, where you can get this study of non-compliance or common error. And the tax audit checklist we have come out in 2022, where we have given a checklist while doing the tax audit, what should be done, what should be checked, how to proceed the tax, how to make the audit program. And if you give this tax audit checklist to your articles, and if they are able to fill up this checklist, the 80% audit will be over. Your judgment and other things will be remaining 20%. So take out the soft copy of this checklist, use this checklist while doing the audit. And this can also be one of the paper for documentation, because in our code of ethics, it is mandatory that whatever audit you are doing, the documentation of the various processes you have followed while doing the audit should be kept mandatory. And once you are doing a tax audit or any other audit, what document, what communication you have made to the SSC, what reply you have got from the SSC, what professional judgment you have taken, how you have taken the various issue, how you have resolved all the issue of the SSC, all these things has to be recorded and maintained in a audit document file. So these are the mandatory requirement of the code of ethics since last July 2020. So just doing the audit is not enough. Keeping the record of the audit, documentation, working paper file, various communication are also mandatory, because tomorrow if the institute or a NFR or anybody can ask the audit working paper file, and if you are not able to provide the file, because they are passing the order on the basis of the audit working paper file only. So every SSC wise audit working paper file is mandatory. So these are the some of the thought process of these various tax audit reporting provision. If you have any query, then we will happy to answer.
So you were mentioning about clause 29A and 29B, which
29 and 29 is a long one. We have given in the guidance note, so you can go through it. And because this time tax audit should be done while keeping the guidance note copy in the table. Because many things we have mentioned what you should see, how you should report. So clause by guidance note we have mentioned. Whatever were the highlights we have already mentioned here. In addition to that, keep the guidance note copy handy with you also.
right, sir. We open the house for any questions. If anyone has any question, they can unmute themselves or put it in the chat box. The speaker will take them. So this is the book which you are referring, right?
Yes, yes, yes.
तो इसमें तो लेकिन checklist वगैरह को सर end में तो नहीं है.
No, not in this. This is the only the common error which we have discussed. This is the only that part. Checklist is another that in our institute website, the link is there.
Okay,
That
so
you can download because that we have released in 2020, 2 years before. Because that checklist is a sort of a audit documentation. If you can give to the article, if you can fill up, 80% audit will be done. Because he has to honestly fill up that checklist, what he has seen, what he has not seen. And then you can decide the professional judgment or your decision, then you can take a call.
Right, sir. So we have one question in the chat box, which I think is answered, but still, Saik Subedi is asking late fees paid to ROC because of late filing is deductible expense and non-reportable in 3CD, or how should it be reported in 3CD?
Late fees paid to ROC.
Right, sir.
Because in a late fees for TDS, it is FAQ of the income tax website already say it is not a penalty, it is a late fine. So in the case of the ROC also, taking the same analogy, we should not report as a penalty. We should report as a late fine.
Right, sir. So you have explained everything so elaborately. I think most of the questions have already been answered. You have taken everything slowly one by one, starting from this two recent UDIN thing and AS thing, interest on borrowings that the NFI has done. And then I'm sure this clause 3.5 reporting is very new to all of us. Most of us are hearing this for the first time, which is quite relevant for reporting in the coming times. And this rule 6DD reporting the MRL that we receive. I think most of us take the MRL, but we don't report it in our 3CD, so 3CB, 3CA. So this is something very new for us.
But one thing I would like to tell all the members that now the time is gone that anything you can report, whether client, to satisfy the requirement of the client. Now the first and foremost requirement is to protect yourself. To protect yourself, you have to take shelter under guidance note. And if you report anything under the guidance note, which may be contrary to the views of the SSC, still you should go by that, whether SSC is happy or not, because for this amount, whatever fees we are getting, we cannot take any kind of risk. So tomorrow the department should not say, like in this NFRA order, the provisioning of interest you have not done or proper classification. So what will happen to client is, but 3 years you have gone, 3 lakh penalty is not an issue, but 3 years you have been banned from doing the audit. Right. And now there was, unfortunately, institute was not so fast in taking a call on the disciplinary matter, but the NAFRA is very fast. Within a year, they are deciding the case. So that aspect should be kept in mind because we have been given the huge responsibility to certify the data. And if we don't certify to please the clients, then we are not doing justice to the profession. And the way the India is moving, the way we are going to be the 5th largest economy. Now we are beating the UK also. And if you are going to be the developing to developed country, then the checks and balance and the rules regulation has to be strict, and those has to be followed by the resident and by the regulator also. So to compare all these things, signing with the full wisdom and informed decision is better than signing like anything.
Absolutely, sir. We are partners in nation building, so we have the equal role for all the reporting and going forward. Right, sir. With this,
Pratik,
I would ask Sandeep.
now requesting any delegate, if any query they have, they can unmute and interact with Ranjit ji, our own Ranjit ji. It's अभी क्या है ना, हमें ये बहुत अच्छा सर ये सेशन रहा कि चेयरमैन सर चितले सर रहे और हमें एक इंसाइट मिला काउंसिल मेंबर्स का किस हिसाब से उन्होंने गाइडेंस नोट को प्रिपेयर करने में हाउ दे हैव प्रिपेयर्ड, हाउ मच एफर्ट्स दे हैव पुट इन, हाउ दे हैव टेकन द व्यूज ऑफ डिफरेंट मेंबर्स फॉर मेकिंग दिस गाइडेंस नोट. तो काफी एफर्ट्स के साथ में इन्होंने आफ्टर 8 years दिस टैक्स ऑडिट गाइडेंस नोट हैज कम. So this for the members only, because it's the essence of the hour, and we should use this guidance note.
So whenever you have any confusion, go to the respective clause of the guidance note, accordingly report. Because in the Supreme Court also, the guidance note or a material suggested by the institute has a value. Because Supreme Court has also relied on what institute is saying. So if the institute is saying this and you have relied on that, then you are safe.
Absolutely, sir.
Yes, sir. ICA is the regulatory body of the every member of the, so every notification, guidance note and accounting standard, we should follow it. And yeah, Manna Lalji Agrawal wants to say something. Yeah, Manna Lalji, please. I think वो कुछ बोलना नहीं. तो
we have a question on chat box by Chirag Madhu Gadia ji. I think it's there. Certain clients are arguing that reporting GST credit in clause 27 of TAR because clause is applicable only for VAT purposes because the word is SENVAT mentioned in this clause.
No.
I think it is read as today's SENVAT, which is GST. So I guess that's how it should be. But sir, your opinion about that?
No. I think the guidance note is also mentioning about that whatever reporting is required to be mentioned, we must report. We should not find out the escape route. By not reporting here, we can escape. No, we should not do like this.
Right, sir.
And one more issue, Pratik, I'm telling you, there is a huge debate also going on. If you remember 1982, when tax audit started, the purpose of tax audit, if the auditor is certified, no inquiry by the income tax is required, they will accept it and pass the order, 143(1). But now, because of the complexity of the transaction, the resources available with the department, they are themselves going on to the nitty-gritty of the transaction. So even if you are making mistake, they are themselves verifying. So in that case, SSC will be in trouble and you will be in trouble.
Right.
And if we are not able to report properly, like this small company depreciation has gone 4 crore, 40 crore. This is now 10 crore. This may also increase. So the professional opportunity will also come down.
Absolutely true. So, but on a lighter note, sir, with this AI thing coming in picture, too many things have been taken care of. I mean, I have never seen big companies getting zero tax assessed in scrutiny, and which I have seen myself, so my clients getting zero tax demand. So this is only because of AI that there is something on the other end which is helping them to assess that things are genuine at the end when CAs are auditing it.
So erroneously, they are putting zero?
No, sir, with full review, sir, I have submitted 2,000 pages submission and they have reviewed it. And after full reviewing everything, they have made a zero tax addition, which is once in a while that we have seen, sir. So this is also happening with this new technology and AI in place, sir. That's on the lighter note I thought I should share. I think, sir, we are coming to the closure, and I would request Sandeep Bhai to offer a vote of thanks to our learned speaker, our Ranjit Bhai.
Thank you, Ranjit ji. Thank you for this conceptualizing this whole session with the chairman and vice chairman of the respective tax audit, direct tax committee and the TAQ, TQR's this tax audit review, TQR review board. So, whether sir this TAQRB is the new board or it's
So it started in 4 years before, 2018. Since then, we have reviewed 150 tax audit reports. So every year, our target is to review 100 reports.
okay.
So right now, we have started listed company. Next year, it will start with non-listed also, proprietor also. So like gradually, we are increasing our reach.
So once you are reviewing and said, then you should release ideal sample copies also for the members, that these are the good ones to copy. Once it is certified by the board, it becomes easy for the members to learn from them and pick up where they are losing behind. So that's a genuine suggestion for the board.
Yeah, that we can do. Like there is a case recently came back 135 CSR expenditure. It is there is a CSR expenditure in the company, and the auditor has claimed in 80G.
Oh, okay.
So the 37 circular of the income tax under section 37 says it is not allowable. But where to stop in 80G? So the auditor has done a right thing and they have claimed 80G and they got it also.
Yeah, they are doing.
This is the role the chartered accountant are playing.
Right, sir.
And rightly said by the chairman of Chitle ji has rightly said about the review board. I think review for review the tax audit reports and all, you can enroll, members can enroll ourselves.
Yeah, anybody. We have
all.
only 10 years or 15 years, but 2 criteria are there. You can enroll as a reviewer also.
As a reviewer, we can enroll. So there is a new opportunity in that.
Yeah, we are paying you for individual reviewer. We are paying 10,000 for group review 5,000 per report. So if you are getting 5 report, 25,000 we are paying.
Right.
Although it's a very low, but it's just.
So the experience, sir.
For experience also where the tax audit
and the service to the
yeah
profession. Right, sir.
Very interactive session. The whole session is very interactive with the lots of learned speakers. We have Ranjit ji. It's a small token of love for your e-library. Thank you, sir. Thank you, sir, for the last 2 hours spending with us.
Was it 2 hours?
Yes, sir. 2 hours.
2 घंटे तो हो गए from 4 to 6. Thanks a lot, sir.
Thank you very much.
Thank all the delegates who joined us, and we look forward to their attendance in future. Thank you. Thank you, sir.
Thank you to all.
We are closing.